In this video, I'm going to teach you exactly how to predict the daily bias, what you should look for, and what you should actually do. And once you get the daily bias, profitability is not that far away. Because trust me, one of the last things it took before I became profitable was to understand daily bias and top-down analysis. And in this video, I'm going to teach you exactly what you need to do. So what is daily bias and why do we care? Daily bias is essentially, it's the higher time frame direction. Now, why is that useful? These markets, all financial markets, doesn't matter whether you trade gold, forex, stocks, indices, crypto, they all move based on the higher time frames, which is the weekly, daily, and 4-hour. And that's because smart money, who essentially are large funds who have billions of dollars, they can only trade on the 4-hour, daily, and weekly chart, and they only look at these time frames. And what that means is that regardless of whatever time frame you're trading, the 5-minute, the 1-minute chart, is that the higher time frame trend will dictate where price actually wants to go. And the highest probability setups will always be in the higher time frame trend. And that's what we actually want to do with daily bias and top-down analysis. It's just to find where is the market actually moving towards? Where is it actually going to go? And to do that, there's 3 things that I always look for. Number 1 is liquidity. Number 2 is order blocks. And number 3 is fair value gaps. Now, what I'm really looking for is for order blocks and fair value gaps, I'm looking for them to be respected or disrespected. And for liquidity, I want it to be really obvious. So what does that really mean, right? Liquidity is the lifeblood of the markets. That means the only reason price actually moves is for liquidity. But in this case here, on the weekly chart, and I wouldn't recommend using the monthly chart. I'd use the weekly chart as like my highest time frame, then daily, then 4-hour. That will give you a higher time frame bias. And that's essentially top-down analysis. But on the weekly chart, we're on gold. And what I'm looking for is I'm looking for a key liquidity pool. And there's essentially 2, right? We've got one right up here and one right here, this low, right? The highs and lows to where price goes to. And, it's quite complicated here because there's a few things that could happen. The first thing is we continue up bullish and we go up like that. We make all-time highs and we take out this high. That's the first thing that could happen. Or number 2, what could happen is that price just starts dropping like this, right? Keeps going down and we get like a reversal, right? There's 2 things that could happen. And I don't know, right, based on liquidity, right? I can't just determine and guess where we're actually going to go. So what I do is I look at order blocks and fair value gaps, right? And what am I actually looking for? So let's study the weekly chart a bit more carefully. You see this fair value gap right here. So let me mark this out. So the gap between these 2 candles, this one and this one, is your fair value gap. Like that, right? You see how the weekly candles, remember, smart money and those who actually move the market are looking at the weekly chart. And they're looking a lot at this weekly candle. So this weekly candle, right, we're at all-time highs, we drop down, we wick into the fair value gap, and we instantly reverse. Look at that, we instantly reverse and we get a huge bullish candle all the way up here. We instantly reverse, right? Now, to me, that's quite bullish. Now, why is that bullish? It's because we've respected the fair value gap, right? And by respect, what I actually mean is you see how the wicks just tapped it like that and then quickly shot off, literally like in a straight line up. That is respect. Now, disrespect for a fair value gap would look like this. Let's say the candle went all the way through and wicked through it. That would tell us that we're not really respecting the fair value gap. Now, why is that important? If we don't respect this fair value gap, right, if price starts wicking through it, and especially, this is for your notes, right, if the candlestick starts closing, so that the body actually starts closing through the fair value gap, that tells us that we're likely to be bearish because we're not respecting any bullish fair value gap. And if you look really carefully, right here, see this candle right here, this last down close candle before your move, this is the order block, and price doesn't even touch it. And I always say this, right? If price does not touch an order block and it just shoots off like that, right? Because what you would normally expect is for price to at least touch the order block and then quickly shoot off. But right here, price it can only get to the fair value gap, right? So look at this, price can only get to the midpoint of this fair value gap and it quickly shoots off, right? That tells us that we're actually quite bullish on the higher time frames for gold. Right, we're quite bullish because price only touched the fair value gap and went off. But if we got a huge retracement like this, right, if you went all the way down deep into this order block here and started to, slowly move up like that, that would tell us that we're not really bullish, right? We've got low probability conditions and we're likely just to come up into a premium so smart money can start to sell again, right? We don't get that. We don't get that at all. What we get is a sharp reversal, right? Price wicks into it, instantly reverses. Now, for me, on the weekly chart, that looks quite bullish, right? We're looking at this higher time frame trend. We're in a bull market. To me, that looks quite bullish. So let's get onto the daily chart and let's just see what we can see. And the thing is with the daily chart is we're just looking for confirmation. We're looking to confirm what we saw on the weekly chart because the higher the time frame, the more important it is. So make sure you remember that because, the markets don't move for 5-minute liquidity or hourly liquidity or even an hourly order block, right? They move based on the higher time frames. And so the first thing I'm seeing, right, is this is the weekly fair value gap, right? The weekly fair value gap here. Price comes in, it literally gaps up here, shoots massively off. That right there is telling me that there's a strong bullish respect essentially because the fair value gap is acting as support in this case, right? And I talk about this all the time in the channel. There's another thing that I'm seeing right away. Let me make it a bit more obvious. This low here, right? This low here has lots of liquidity. And by liquidity, I just mean resting stop loss orders, right? Billions of dollars worth of stop loss orders are right here, right at this low, because everyone knows, let me just zoom out a bit, we've been on the bull market in gold. Remember support and resistance, you put your stop loss at the low and you buy. So people would have their stop loss here, moved it here, moved it here, moved it here, right? Everyone knows they trail the stop loss orders up. Someone would have done it here and they would have got swept out. Again, right? Right here, there's so much liquidity, and this wick here is your liquidity sweep. And we talk about this all the time on the channel, right? And I love to see this, right? This is what you want to see when you're actually bullish. So I'm going to mark this out, liquidity sweep. Now, what is a liquidity sweep? A liquidity sweep, right, is let's say when you're bullish and we have a low and we know there's lots of liquidity at this low. You see how price comes down, it wicks through it, just wicks through it, takes out that stop loss, and then quickly reverses. I mean, look how many daily candles we have here. 1, 2, 3, 4, 5. A whole week of strong, massive up-close candles, big decisive candles, right after this wick came and took out the stop loss, right? And this is something so important. It took me a few years to realize this. The wicks, right, especially on the higher time frames, and even the lower time frames, are mainly stop runs. They're mainly stop runs. That's what it really is, right? So this wick here is just a stop run. The only reason price comes down here is to take out that low, and then we quickly reverse. We quickly reverse. And what that does is, because we know there's billions of dollars worth of stop loss orders there, smart money gets to take the other side of it, right? Because they need to buy. Right, if smart money wants to buy, remember, they're buying with billions of dollars, not buying with $1,000. They're buying with billions of dollars. They need someone who's going to sell billions of dollars worth of gold. Now, we're in a bull market, so there's really no one selling billions of dollars worth of gold. But at the stop loss, their stop loss order, because they bought it, it's going to force them to sell it, right, to get it back. And that's going to allow smart money to buy it from them cheap, right? So ideally, this large fund, whoever's here, they don't want to, they don't want to get out of that position, right? They know long term we're bullish, but the way the markets are, it comes for their stop loss, takes them out. Smart money gets to, they're buying billions and billions and billions, and price quickly shoots up and it goes all the way up there, right? That right there is your liquidity sweep, and that's super, super bullish. Right, so what does that mean, right? So we know on the weekly we're bullish. We know on the daily we've had a liquidity sweep, and we've quickly shut off, right? The only thing I'm going to say now, you see this fair value gap here? Because a lot of people on Twitter were asking me this. They're asking me, are we bullish or are we bearish? Because they don't know. The reason is these candles here, right? Even though we're coming into a discount, and now a discount is it's essentially a smart way of saying, buy cheap, right? Buy low, sell high. That's essentially what a discount is. It's just below the 50% level. But I don't want to talk too much about that. That's not that important. Right, but what a lot of people get wrong is, let's say we're in a bull market, they literally only want to see up close candles, right? And people on Twitter ask me this all the time. This right here is just getting us into essentially a discount, right? And the only reason we came down here was to take out, you see these lows here with the liquidity. That's the only reason why, right? We're at all-time highs. Nobody's selling gold. Smart money realizing we want to buy billions of dollars worth of gold where we can actually be able to get our orders filled here and here, right? That's the key liquidity pool. That's the only reason we came down like that. We've gone up. Here's your retracement, and then probably continue up, take out these highs here, right? Because lots of people, they think that in a bull market, price is just going to move like that, right? It's going to move straight up. There's going to be no down close candles for them, and that's just not how it works, right? Even if we're bullish, let's make this a bit more clearer. When we're bullish, what you're going to see, strong move up, no retracement, strong move up, maybe a liquidity sweep with this low, and then move up like that. Retracements like that, right? There's going to be down close candles, and what's happening is, in these down close bits here, in this down close here, where liquidity sweep is, people are starting to short, or they're panicking, they don't know what's going on because they're not looking at the higher time frame direction and analysis. So, even when it's a bull market, price will still drop to essentially allow smart money to buy cheap. Now, buy cheap, literally all it is, get the Fibonacci from a low to a high, and below the 50% level is essentially a way of smart money saying it's cheap to buy, right? And if you look here, literally look at the bodies, right? Because the bodies tell you the story. You see the bodies respecting the 50% level. They wick down a bit, and then they quickly shoot off, or at least they will shoot off, right? We're in live market conditions right now. So let's just remove this, and let's just study the daily chart a bit more clearer. So look at this gap here, right? Here's your fair value gap. Right here is your fair value gap. You see how price wicks into it? Well, at least it's about to start shooting off. I'm doing this in the live market, so I want you to know what it actually looks like live, right? So price should shoot up, right? And now we're going to get onto the 4-hour chart. So we know on the weekly chart, we're bullish. We've had respect of the fair value gap, liquidity sweep, respect of another fair value gap on the daily chart. And now on the 4-hour, the only reason we're really on the 4-hour chart is we just want to look for liquidity, right? We just want to look for liquidity. And again, look at this. Here's your liquidity sweep again. And I'm just going to literally just put the horizontal line here, right? Look at that. Price there's lots of lows here, right? There's lots of liquidity at this low here. Price wicks down, shoots right off, comes back down into an order block to allow us to continue on, right? And I don't normally do this, but let's get onto the hourly chart really quickly. So we know we're bullish. We've had a higher time frame liquidity sweep here on the daily. We've had another liquidity sweep on the 4-hour chart. And then you get onto the 1-hour chart, right? Now the 1-hour chart, and this is important, the 1-hour chart is not a higher time frame, right? Smart money, they're not buying based on the 1-hour chart. And they might execute their orders on the 1-hour chart, but all the analysis is done on the higher time frames. Let me just tell you something. This right here, because this wick here is the liquidity sweep. An optimal trade entry, which is my favorite entry pattern. This right here could be an easy entry for smart money, right? An easy entry, just like that on gold, like that, and then target a free tomorrow, like that. A nice and easy entry for them. And there's lots of entries we've done on the channel, but the thing you want to look for, the 1-hour chart in this case, is you see this order block here. Now, this little doji, look at this little doji. I'm just going to merge these two candles together, and this is something for your notes about order blocks, right? If you've got a massive doji candle with a tiny little body as an order block, just forget about it. Literally just forget about it, because the body of an order block is the most important thing by far, right? So this one right here, this massive body, that's what I'm going to consider to be the order block. And if you look at it here, like that, that's the body of the order block. And again, look at the wicks, right? The wicks are stop runs, right? If you see a wick that just taps an order block or just taps a fair value gap and instantly shoots off, that right there is probably the most, the strongest, bullish sign that you can get. And bearish when you reverse it, right? That's such a strong sign. But the price only came down just to tap the order block. Now, why does it do that, right? A lot of smart money traders, I say, or hedge funds, they're essentially like algorithms, right? So it's coded that as soon as it hits this order block in a discount, which means it's below 50%, they just fire orders, bam, 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 right? So it shoots right off, right? So algorithmically, it's coded that this order block here, as soon as price hits it, bam, 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 they're going to start buying. Right, now what does that mean for you as a trader, right? We've done all the hard work on the higher time frames. I keep saying this, right? The hard work is done on the higher time frames. And the good thing is, once you've got the bias, right, bias doesn't change every day. Right? Not, every day, like let's say you trade on Monday, you're not going to wake up on Tuesday and think, what's the bias, right? You've got the bias for at least a week, right? At least a week. And at this point here, you're just looking for any sort of entry pattern. And, we're not really going to talk about entry patterns, but my eyes just instantly see this fair value gap here. Right, another fair value gap. If you wanted to trade the hourly chart, right, there's your entry. Bam, it's the fair value gap. Now, what do we target? I always say this. What do we actually target? Liquidity. Now, where's the next liquidity pool? Remember, we're bullish. We've respected the fair value gap. We respected it again, right? And this is in live market conditions. Where's the next obvious strong liquidity? Where's it most likely to be? Like here. This is where it's most likely to be, because we know at key highs there's so much liquidity. Right? And price is probably going to come up to you, another retracement here, and bam, like that. Right, there'll be lots of entries on the 15-minute, 5-minute, any bullish fair value gap, any bullish order block will do after the liquidity sweep. And we're not going to talk about entries specifically in this video because it's going to take for ages, but literally all the other videos on my channel, they have a specific entry pattern that you can use. And the entry pattern I always recommend for beginners, let's say you're bullish, right? So you've got some sort of swing here. This low here is your liquidity sweep. So price comes down, takes out the low, shoots back off, right? Gives you a fair value gap entry here. And then you ride it up to, let's say this is the liquidity pool, right? Wait for a liquidity sweep. Wait for a sharp move in the opposite direction, in the direction of your bias. Wait for a fair value gap to form. Enter on the fair value gap. Ride price up. Aim for a 2 to 3 to 1. And there's loads of videos on the channel about that. But I'm going to give you another example. This time it's going to be on the dollar index, which is super important for forex traders. Okay, so we're on the dollar index. And you might be asking, who cares about dollar index? We don't normally trade it. So why is it important? Let me tell you something. This is the most important market in all of trading. Right? It doesn't matter what you trade. Stocks, indices, crypto, forex, indices. I've already said indices, but it doesn't really matter, right? Whatever you trade, the dollar moves all markets. Now, why does it move all markets? This is the currency of the US, right? Which obviously it's the most powerful, it has the biggest economy, and it drives all financial markets, right? And especially forex. We trade forex, and you got the bias right in the dollar. Well, you've essentially got the bias on the euro, GBP, AUD, dollar, yen. All you gotta do is for the mates, let's say euro and GBP, is you just gotta reverse it on its head, right? So if we're bullish on dollar, that means we're gonna be bearish on euro. It means we're gonna be bearish on GBP, and it means we're gonna be bullish on dollar, yen, right? That's so important. So run the weekly chart. The first thing I'm looking for, it's a bit more obvious, is the first thing I like to see is I like to see a liquidity sweep, right? I normally like to see a liquidity sweep and a sharp reversal. If you look at this, we've had such a strong, massive, bullish move on dollar And this low here had lots of liquidity. So let me mark this out right there. So right here is your liquidity. And right here is your liquidity sweep. So let's make this a lot more clearer. So liquidity sweep. You see here, right? And this is, see how price comes down, wicks through it. I know we get a tiny bit of a body closure. And someone was asking me about this. A liquidity sweep can include a body. Right? A body can close through it. It's fine. As long as it's a tiny little body, it's alright. But what we're really looking for is we're looking for price to come down just to take out some stop loss orders and then sharply reverse, right? I'm sure you can agree we've had a huge aggressive move in the opposite direction. So right away, I do like to see that. The only thing I'll say, and this is quite important, right, is, you know, we've taken out a lot of liquidity. We had key liquidity here, and key liquidity at this high here, right? And we're on the weekly chart. And if we look really carefully, and this is very important because someone was asking me about this. So this right here is a big bearish fair value gap on the weekly chart, right? It's a massive fair value gap on the weekly chart. Now, usually a fair value gap will look like this, right? This would be your fair value gap. But you see this candle here. You see how we wick into the fair value gap, we respect it, and then we start reversing off. What that really means is that part of the fair value gap has been filled, right? This wick here filled part of the fair value gap. So what that really means is the remaining part of the fair value gap is this bit here. This is the remaining part of the fair value gap, right? This wick has already filled in part of the fair value gap. This means that this bit here, this bit that's remaining, this is what's remaining of the fair value gap. Now, why do we care? Now, a fair value gap sometimes acts as a drawn liquidity. Now, a drawn liquidity just means a drawn price. That's all it really means. Because this is a good selling area for smart money. And remember, we're bullish, right? So we've come up, we've taken out liquidity here, we've taken out liquidity here, we've taken out here, and we've tapped the fair value gap. Now, I don't normally like to see this, especially if you're bullish. Right here, price wicks into the fair value gap, instantly reverses, right? Wicks in, sharp, aggressive move down, and a massive down close candle all the way down. Now, I don't normally like to see that if I'm bullish. I really don't like to see that. And another thing I'm looking at, see this fair value gap here, right? See this fair value gap right here. Price has respected this fair value gap too, right? And this is so important. People always ask me this all the time. What if price is respecting both bearish and bullish fair value gaps in order blocks? What do you do then? You simply just wait for it to become a bit more obvious, right? Because on the weekly chart, and I'm telling you this as like an ICT chart student, like, I'm not sure what dollar wants to do. For me, it looks like it's either going to consolidate or reverse, right? You know, because it's Thanksgiving, literally the day of Thanksgiving that I'm recording this. So, you know, it could consolidate until the end of the year and then clearly move in one direction. Now, what would that actually look like? All right, we've had a massive move up, lots of fair value gaps here that need to get filled. Price could do something like this, consolidate to the beginning of the year, and then bam, well, let's say like this, right? Could do that. That's one scenario that we could get. Another scenario we can get is price consolidates, like it's doing here, and then starts breaking down aggressively. Takes out this low, takes out that low, and yeah, who knows what happens after that? We go below 100. Two things that could happen. Now, I'm not sure, which means I'm going to wait, or at least I'm going to get to the lowest time frame. I'm going to wait for it to be a bit more obvious. And nobody tells you this, but there are going to be days and even a week where you can't determine daily bias, right? Where it's, you know, it's 50-50 gamble, and you don't want to trade that because that's a low probability trading condition where you often tend to lose. So, you know, you don't want to be trading any of those, right? Because that's going to be a low probability trading condition. If you're not sure, don't trade. And I always say this: if you don't know, don't trade, right? I'm personally, like, I'm not trading any of the dollar pairs until it's a bit more obvious to me, right? I want it to be more clearer for me. So let's just remove it. Let's get onto the daily chart and see what we can see. So we've touched the fair value gap. We've moved down. Now, one thing I'm looking at here is, you see this low? So we've kind of wicked through it. Now, we haven't instantly shot off. Now, is this a liquidity sweep? Just think, right? Pause the video. Is this a liquidity sweep or not? Right? We've touched the fair value gap up here. We've come down. We've taken out this low. Is it a liquidity sweep or not? Right? The answer is we don't know. Right? We don't know if it's a liquidity sweep or not because the candles haven't formed. Now, if price does that, right? If it goes straight up, we get like 3 bullish, you know, massive bullish candles. That right there would be a liquidity sweep. We would look for a retracement and continue up, taking out that high. That's what we would look for. But right here, we're not sure, right? We're not sure. We have huge bearish candles. We're not sure, right? And that means we're going to wait for more information. We literally need to wait for more candles to print, because what could also happen is this could be a little doji candle and we get a few more candles, and we could even touch this order block. We don't know, right? So we're going to wait for a few more days, right? But remember, on the daily chart, we're going to wait for more candles to print because we're not sure. And if you're not sure, you don't trade. Right, so we're on the 4-hour chart, and you know, this candle right here, the last down close candle fully up move, that's your order block, right? So I'm going to mark this out. This right here is your order block, right? Look how price comes in and it literally wicks below the order block. Let me make it a bit more obvious. It literally wicks below the order block, right? That is not bullish at all. Right? That's not bullish at all. Remember the last example? The last example when price came, touched the order block, quickly moved off, right? That's very bullish. But the fact that we've gone deep into the order block, right, and we've not even sharply moved up, we've got lots of little doji candles there. That tells us it's low probability. Right? That tells us low probability trading conditions, and we just literally want to wait, right? Sometimes the best trade is no trade. The best trade is no trade. The best trade is just to sit on your hands and wait. Sometimes you need to wait for more data, and this is a case, a live example where you need to wait for more data. And I'm just going to show you the euro dollar, because if we've been bullish on the dollar, so let me just clear all this. So let's go into the weekly chart again. If we've been, bullish on the dollar, what would you expect with the euro? Like, you'd expect it to be bearish, and if we're on the weekly chart, it's almost a mirror opposite. Right, you've got the euro drops massively, dollar moves up massively. Right, it's a mirror reflection of each other. This is why I say dollar is so important. And dollar strength, and this is where you notice, dollar strength will force the price of euro down. Right, it will force euro to go down. Same thing with GBP USD. Right, the dollar is king. Right, a strong euro, but a stronger dollar. Euro dollar is still going to move down. It's still going to move down. Now, it won't be as strong, but it's still going to move down. But in this case, we've got a weak euro and we've got a really strong dollar. That means it's going to drop massively like this, right? Right, again, and if we look at this candle here, right, see this candle here, it's a bit more obvious. This candle here is your order block, right? And the body here is the order block. It's the only thing that really matters is the body. You see how price wicks into it, instantly starts moving off. That almost looks like it could be a reversal, right? Almost looks like it could be a reversal on euro, right? And combined with the fact that we've got kind of a consolidating dollar, we don't really know what's going to happen. It could be a reversal. Now, what does that really mean? Let's get onto the daily chart here. Get onto the daily chart, right? You look here, lots of liquidity at these equal highs. And again, we've got a bearish order block, completely disrespected as price comes through it. Very likely that the euro is going to do something like this. Come up, take out this high. And here's another thing that's really important. These gaps here, these volume imbalances will almost act like fair value gaps, right? It will almost magnetize price towards it, right? So what you can see and what you're likely to see is that price going to come up and start filling in all these gaps, right? The gaps being this bit here, right? So here is your volume imbalance. So price can come up, fill in these gaps, touch the order block, and then who knows what could happen. So point is, in this sort of market condition, you don't want to trade. You just want to wait a few more days for it to be obvious and clear. Daily buys should be so easy and obvious, right? Remember with gold, how obvious it was. And, you want it to be so clear and overwhelming. I'm going to give you another example, this time on the US30, where it's so obvious and easy where price actually wants to go and what the daily buys actually is. Okay, so we're on Dow Jones, and this is a good example because we're at all-time highs. And there's no liquidity that we want to target, but the first thing we want to do is we want to see, is price respecting bullish fair value gaps? Is it respecting bullish order blocks? And in this case, yeah, it's overwhelming. We've got a weekly fair value gap here. Price comes in, touches it, instantly reverses up, and it literally gaps up. Right? It literally gaps up. That's how bullish we are. So we always want to see, and we don't even touch this order block here. Right? Now I'm going to compare this to another example, which is the Nasdaq. So Nas 100 up. I'm going to show you what a lower probability market looks like, and you can use this just to avoid actually trading it. So the weekly chart for Nasdaq, it does look still bullish. Right? It still looks bullish, but with the Dow Jones, it's a lot more aggressively bullish, and you want to be a part of the strongest setups. Right? Similarly, when you've got a strong dollar and you've got a strong GBP USD, and you've got like a weak euro dollar, you want to be shorting euro dollar. Right? You want to be in the best setups, and the best setups will be the ones that are either the strongest and you're going long in, or the weakest and you're shorting. So let's get onto the daily chart for Dow, right? We're going to get onto the daily chart for Dow. And again, you see how we touched the fair value gap, instantly shoot off. Now let's get onto the daily chart for Nasdaq, right? I think that's a daily chart for Nasdaq. Right, if you look at it, look at all these candles here. All these little doji candles, not really anything, whereas with Dow Jones, we instantly shoot up, we gap up, we take out the high. That right there is SMT divergence. Now, I don't want to talk too much about that, but what you really want to do is you just want to look at the daily chart, and you can just see if you're bullish, which both of these indices are bullish, but the Dow Jones by far is the most bullish out of the two. And the reason we know that is you see this high here, the fact that we've taken it out, the fact that we've got nice, strong, big candles, whereas here, we still haven't taken it out. Right, that tells us that the Nasdaq, even though it's bullish, it's very lethargic, very slow, and there's going to be lots of trades, and you probably have had this all the time. And I used to trade in NASDAQ. This used to happen to me, where let's say your stop loss would be here, price would come out, take you out, and then maybe come out and then just consolidate for a bit, and slowly move up like that, right? Whereas with Dow Jones, what you'll get with the Dow Jones is you'll get nice, big, strong moves, small retracement, big moves, small retracement, big moves like that, right? And that's what you want to be in. That's what you actually want to be in as a trader. And this is the whole point of doing higher time frame, top-down analysis, that you could actually look at the chart. And just by looking at the daily chart, we know we don't even want to trade NASDAQ. We don't even want to go long in it. We just want to go long and down. We just want to go long and down. And, you know, you can get onto the 4-hour chart and make it a bit more obvious, right? Again, just like this. And again, we're respecting this order block right here. This order block right here is being respected. And I just want to quickly look at the S&P 500 just to show you the comparison between the two. Right, so we've got the S&P up around the daily chart. Now look at this, right? Look how we touched the order block. Here, see the wick? We touched the order block right there and the fair value gap, and then we shoot right off. And we've got this obvious liquidity dip, so we're about to go for. So we're literally about to go for all-time highs. So I'm recording this. And if you look at NASDAQ, here's NASDAQ. Small, little lethargic doji candles, large wicks that we don't want to be a part of. S&P, nice and strong. Dow Jones, really strong. So what does that actually mean as a trader? Right, you've done the top-down analysis, but looking at the higher time frames, I mean, you don't want to trade NASDAQ, you want to be in Dow, and, you know, you can also trade the S&P. Right, you can also trade the S&P, you can also trade Dow, but you just avoid NASDAQ. And the exact same analysis that we've just done here applies to GBP, USD, and Euro Dollar. And it also applies to silver and gold. So let me really quickly show you this, right? Let's go down onto XAU USD. Alright, so here's gold. Like we said, we know we're bullish. We know all about it. We know we touched the fair value gap. Right, to continue going up. And then here's silver. Right? Here's silver. Silver, slow, lethargic, you know, it's taking out this low. Not good to trade at all. Whereas gold, nice and strong. Nice and strong. You want to be in those sort of pairs. And let's get Euro Dollar and GBP USD up. So, right, if you look at Euro Dollar on a weekly chart, look at this low, right? Look at this low, 15th of April. See how we take out the low, aggressively take out the low. Here's GBP USD, right? Look at that. Here's the exact same low, and we refuse to take it out. We refuse to take it out. Now, what does that mean? That means GBP USD is very bullish. The underlying strength of the pound, so GBP itself, is bullish. Whereas with Euro Dollar, the euro itself is very weak. Right, now what does that actually mean as a trader? It means on lower time frames, you want to be shorting euro and you want to be going long in the pound, right? The exact same way, let's look at the S&P. If you want to be going long in the S&P, and you want to be shorting NASDAQ. If you were bearish, you want to short NASDAQ. And you want to go long in the S&P, right? This is how you use top-down analysis and daily buys to actually be in the best setups, right? And, you know, that's the power of daily buys. Just by looking at the higher time frames, I already know on the 5-minute chart what I'm looking for and what I don't want to even be a part of, right? I know if I want to go long, I want to be in GBP USD. I know if I want to go short, let's say, I want to be in Euro Dollar. Right? I know just by looking at the daily chart, don't even bother looking at NASDAQ, right? Don't even go on the 5-minute chart. I know, look at the S&P, let's get on the 5-minute chart, target easy liquidity. Right, that is how you use daily buys. That's how you put it all together. Put it all together. You filter out the bad setups and you only trade the absolute best A-star setups. But yeah, that's daily buys in 30 minutes. And I know it's a lot to take in, but it's just so important that you understand it. And yeah, I'm exhausted by recording this. I'm absolutely exhausted, but there's a lot of value in here. Feel free to play it again, you know, if you need to. But yeah, understanding the higher time frames and, you know, how it actually all fits together is such an important part of trading. And, you know, I know top-down analysis was highly requested by a lot of you. And yeah, I hope this video cleared it up for you. If it did, please like, subscribe. If you have any questions whatsoever, leave a comment. And, you know, if you want more in-depth analysis, if you want, you know, specific entry models, I've got a course down below that you can check out. But other than that, I'll see you guys next video. And hopefully, as I'm recording this, I should be on 1,000 subscribers. Because I'm recording this, I've got 995 subscribers. So almost there. And I hope, because this is going to go up on Saturday and I'm recording this on Thursday. Hopefully I'm at 1,000 subscribers. And if I am, I appreciate every single one of you. Thank you so much. You guys motivate me to keep going. And yeah, I'll see you guys in the next video. Peace.